There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome back to the Trading Justice Podcast. I'm your host, Matt Justice, along with my co-host, Tim Justice. Tim, how are you doing today? Tim?
Holy cow. I thought I was doing great. I had the mute button on, Matt. I must be a fool today. Running around like a chicken with his head cut off. Is that the old saying we used to hear?
Yes, I believe it is, and I was feeling real dumb there for a second, and I actually contemplated cutting a little bit of that out, but I haven't made that decision yet. Oh, man, how you doing in the market?
You know, amazing, and I do want to talk markets here in a minute. I want to tell you, I had a great conversation just on my drive home with my student who's in town to learn how to trade stocks and options and futures. Mm-hmm. And he's a business owner, and he is trying to get out of his business. And, you know, we had a wonderful conversation about, you know, making that transition from being a business owner into potentially an investor. It's one of the hardest things in the world to do. You know, you probably know many people that have had to battle with that decision.
Oh, it's a tough decision. It's people feel like it's a little risky. A lot of people are risk adverse. They don't want to take risk. But what else are you going to do?
Well, I think it's hard. And think about this, Matt. And I gave him some advice. We talked about it. We kind of brainstormed some ideas. But when it's a business that you started from scratch, mm-hmm. and you've run it for decades, and it's your baby, and it's almost like the business owner from inside. They believe that it would fail if they weren't there, right? Yeah. And they have a hard time conceptualizing a reality without them running the ship, being the captain, the head, you know, of the whole thing. And I think that's a problem. I mean, it's a big challenge, you know, but there's got to be a way you can get creative with that.
Well, I mean, it goes back to the quadrant, right? ESBI. As an S, all you are is an employee. You're an employee of your own business, and a lot of what holds those types of people's back is the fact that they've done it forever. Nobody can do it better than them, and what's made them successful is also what keeps them from reaching their ultimate success. And we've seen that in our own lives with our father, as many people have heard on this podcast before. And what's going to hold him back, you know, it's a choice. And we've talked about you and I making that choice before. And, you know, to me, it's not about making, you know, one cell phone business successful. It's about getting multiple businesses out there, getting other people to run the business, so to speak. And so, you know, and maximizing and leveraging your time. And that's the one thing that all of us have the exact same amount, the equality of time. We all of us only have 24 hours in the day. And so you got to learn how to leverage your time. And the only way to leverage your time is by getting other people to work for you.
Yeah. Yeah. Tell me what you do. Just a funny story with him today. We were sitting there training and teaching, and I was teaching him, working on markets, trading, all that stuff. And we were listening to satellite radio on, Outlaw Country.
Oh, yeah.
And the announcer on Outlaw Country, I don't know if you guys know satellite radio, they can cuss all they want.
Oh, yeah, they don't care.
The guy on the radio decided to go on an F-bomb rant that lasted about 2 minutes.
Ooh.
And I couldn't get to the phone. I was in the other room.
Well, you don't know if it's only going to last 5 seconds or.
Right.
Oh, wow.
Let the whole thing go. I was like, it's not me. I don't know.
Okay, hold on. Is the guy a very conservative type individual? Is he laid back? Is he what?
I think I could coin the term Colorado conservative.
Colorado conservative.
If you can follow me with that.
How is that different from Utah conservative?
Well, Utah conservative might be tied to religion, where Colorado conservative is probably more tied to mindset and being from a small town and that kind of thing.
Okay. A lot of similarities, though. I mean,
right.
outside the religious aspect of it. All right, So Colorado conservative.
So he didn't care.
He didn't
was
care.
laughing.
All right,
He
good.
thought it was funny,
I was going to say that's probably like a Texas conservative then.
Yeah.
Yeah. Okay, gotcha. So kind of laid back, just cool like that. You know, to me, you know, there's a time and place for everything, I suppose. That probably would be uncomfortable on your first day, though. Yeah, and this was your first day,
but
right?
that's the thing about the way I teach people. I've been working with him on Skype and online, getting him ready for his mentorship for a couple months, so I knew him pretty well. Awesome. I've heard him cuss, just not that word. You never know. That word, for some people, some generations, some backgrounds, that word is off limits. You know, you say that, you're getting smacked.
Oh, it's off limits in my household. I'll tell you that right now.
Yeah, I agree.
Oh, yeah.
I can't imagine my kids dropping something like that and me not slapping them around.
Oh, my son dropped it one time, and I about put him up into the wall. You know, it's like, seriously, Tanyan, come on, buddy. He was just mad. You know, he just kind of let the emotions get the best of him, and it happens to every kid.
Full disclosure, by the way, I don't think I could ever hit anything in this.
No.
Let alone slap my kids around. I know that's like more of a term.
She's only 5, man. I mean,
yeah.
She's a cutie. So that's
don't call the Child and Protective Services or whatever that department is.
That's my little Sambo. Yeah, no. We are pacifists when it comes to violence in many capacities. Tim, I wanted to talk a couple things today that was kind of on my mind. I was doing, it was outside my typical daily routine, and I was just kind of reading the news and whatnot, and I ran across an article that was from a couple years ago, but it still kind of struck my mind. And what the article is entitled, it's called "The Top 10 Stock Market Myths." And what I wanted to do is I wanted to read the myth and basically get your take on it, okay? And we can kind of talk about each one. So myth number 1, this is a good time to invest in the stock market.
So let me understand the premise of this first.
Yes.
Because this is the first time you're dropping on me. For those of you out there who may not have picked this up, we don't do a lot of preparation for our podcast.
That's not what we do.
Unplugged, right? Like the old Nirvana album on MTV.
Unplugged,
right there.
No editing, no preparation. It's two traders getting on and talking shop, so to speak. So
just hanging out and talking.
I just want to get your thoughts on it. This is a good time to invest in the stock market.
So these are myths?
These are top 10 stock market myths.
And you want to know if I agree with them?
Agree, disagree, what initial thoughts?
This is a good time to invest in the stock market. I would say predominantly people don't believe that. Mm-hmm. I would say, in fact, that I would probably the opposite. I read a study once, Matt, that the number one thing people were afraid of when it came to getting into stocks is that they were afraid they were going to get in at the wrong time. Mm-hmm. That was number one. So I would say that is a myth, and most people are very nervous to get into stocks.
Well, and as they should be right now. I mean, there's always a good time, there's always a bad time, right? And it depends on your level of expertise and how you trade the market. I think the market, if you're just talking about trading, I think the market is always a good time to trade. I mean,
with education.
Exactly. Whether you're short, long, trading options, currencies, I mean, whatever you're doing. As a trader, we don't care what direction the market goes. But what this is getting at is investing in the market. It's getting into the market. And when you're at the top of a long-term cycle in the market, when there's honestly, Tim, I cannot remember a time in the history of this market that there has been so many potential calamities out there, both economically, politically, you name it. I mean, the Eurozone is just burning right now. Japan, oh my goodness, don't get me started on what's going on over there economically. But even here in stateside and whatnot. So, is it a good time to invest in the stock market from a long-term mutual fund type scenario? Absolutely not. I would not agree with that. So I would say that one in its current time is a myth. If you ask me that same question 2 years from now and we're at the bottom in the market, I would say, yeah, it's a great time to invest. But you got to ask yourself, when you're going into an investment, do you have the time necessary to make money, to justify the risk? And I think the risk is so much greater than the potential return if you are getting into an investment right now. That does not mean, trading podcast listeners, that you go out there and close all of your long positions. That's not what it means. There's a difference between already being into an investment and looking at getting into one right now. Would you agree with that?
I like how you throw questions at me. Of course, after you just say like 9 sentences.
Yes,
would
you agree with that?
Yes or no?
Yes.
Yeah. What am I being cross-examined here in a
You
courtroom?
know my style. you know how I get down.
Objection.
Objection.
Yeah, no.
Hearsay.
Objection. Right.
He's badgering the witness.
I'll tell you, actually, the thing I was thinking about is, as you were talking there, Matt, so many smart points there. It goes to the question I would have is, well, then where's the money coming from? If most people out there know that it's not a smart time to be throwing money at the market, why is the market perpetually moving up like a slow bleed to the upside?
It's the death crawl is what I've labeled it. Because it's not skyrocketing up. It's literally just crawling. And I think a couple things is going on right now. Number one, in comparison to the Eurozone, in comparison to certain aspects of Asia, our markets seem like a little safer right now in relationship in comparison to the other markets. And we live in a global market where the U.S. market is not just invested by U.S. consumers, right? Mm-hmm. Okay, so I think that's number one. But I think even bigger than that is stock buyback programs. The stock buyback programs based, with Apple and every other company out there, it's just been absolutely astounding how much, stock companies have bought of their own stock just recently. So I think those are the two leading forces, but I see those two declining quickly.
Well, Apple got crushed today.
Oh, man. What was it, 4% down?
Right? What is it? It's Wednesday. What is the day? The 3rd? 3rd of September. Yeah, they got crushed today, like 4.5%. And from what I read in the news, they got a downgrade, but then there was also some concern about the security over their cloud system.
Well, they had that celebrity leaked thing that, and Apple said it wasn't them. And they said based on their 24-hour investigation, 24-hour investigation, that there was no evidence that led to any breach in the iCloud. And so, that's a little bit of a negative news. You also had the downgrade, but I think once you had that initial sell, I think people started locking in profit really quickly. And also, it's coming into an event. I mean, Apple's got the event next week where we're talking about the release of the iPhone 6. You also got the potential of the iWatch. People are a little, anxious about that. So there's a few things going on, and also Samsung has been eating into the market cap a little bit, and Samsung had some good news come out today. So I think it was a little bit of a few things that really kind of drove Apple down. I'm not overtly concerned about Apple yet. It's still above prior pivots. It just got it hammered a little bit today.
Are people really this stupid to take naked pictures of themselves, send them to a remote server they call an iCloud, and not expect them to eventually get hacked?
Honestly, yes, I agree with you 100%. Okay, I agree with you, especially when you're a public figure, right? Where people are literally, you have these leeches, these just people that are just waiting for you to mess up. So I certainly think there's a little bit that I feel bad for them, to be honest with you, though. I mean, just these people who are just completely innocent to a certain extent in the whole scenario. I think it's kind of bad, but
and there are a lot of different ramifications to it.
Well, and also, did you know that when you take a picture on your cell phone, it will automatically upload to Facebook? It will automatically, when you connect it to your... I just connected my iPhone to my computer, and I do that every now and then just when I'm trying to charge it. And it automatically put every one of my pictures in Dropbox.
Oh, yeah.
Automatically.
Yeah, mine does that.
I mean, so it's one thing to take a picture of yourself and whatnot, but I'll bet you some of this, they didn't even know where all these pictures were. So
Listen. For everybody out there,
how did we get on celebrity leaked pictures on the
Apple? Because they actually
that's right.
That event caused the sell-off and the downgrade in Apple. But I want everybody out there to think about something while you think about your security on your network and all that. There's a facility here in Utah. It's about 20 minutes from my house. And it is an NSA facility. I believe it's NSA, Matt.
Isn't one of the bigger ones?
They
like
store everything you can think of.
Everything.
Phone conversations that were digital.
Yeah.
They save them. They can go back and listen to who you talked to and what you said.
Yeah.
Text messages, emails, anything sent over those public servers that AT&T and all the major companies give them access to.
Well, it's not only that; it's every transaction you ever make. It's literally what part of our life today is private in any capacity that we actually know of.
That's where I'm coming from on this whole thing. Like, listen to these people, say, "Well, I can't believe my privacy is being violated."
Your privacy is being violated every day.
Yeah.
Every single day. And you know what? But what are you trying to hide, Tim? You're trying to hide the naked picture you took last night. That's what you're trying to hide. It's none of your business, NSA.
Yeah.
I don't know if I want. Never mind. I won't go there. Okay. Second one. Stocks on average make about 10% a year. We've heard this for a very long time. This is what the money managers put out to consumers. This is what you hear. If you just park your money in the market 40 years later and you average 10% a year, you're going to retire wealthy. Well, historically, we know that's completely false, but I want to get your take on it. Stocks on average make you about 10% a year.
Biggest bullshit lie I've ever heard in my life.
First
of all, that is so perpetuated straight from Wall Street. And what they've done is they want to give everybody this false sense of security that if you just stay in it for the long haul, 40 years.
You can't sell.
Years that are good. Yeah, some are bad. They average out to be 7 to 10% or whatever number you told me. And it's just like, oh, come on. That's not the world we live in.
Well, no, number one, a certain percentage of that is inflation. That's a certain percentage of it, whether it's 2, 3, 4%, however you want to put that. So the actual real number, just outside of inflation, is between 5 and 6%. But even at 5 and 6%, that dates back to the 1800s, Tim, the early 1800s. Well, I hate to be the bearer of bad news. We live in a technological age that was not exactly the exact same as it was in 1820. You got to look at what the averages is over the course of what this current market is doing. And I really put the modern market, and people will differ on this, but me personally, I put the modern market from 95. From 95 on, where's your gains from 95 on, given the different bulls and bear markets, the information age, the technological age. Before that, it was slightly different. But to me, it's. I was talking to a group of students just last night, and basically, I said to them was this. I said, if you're going to break the cycle, because go look at your 401ks. I asked everybody in the class. There was about 35 people in the class. I asked everybody in the class, go look at your 401ks over the last 7 years. How many of you are about break even? And almost everyone was about break even. So if the stock market averages, and this is after one of the most historical runs over the last 5.5 years that we've seen in the market, how many of you are break even? About every single one. And so when you hear this stocks average about 10% a year, technically there's some truth to that when you date it back to 1800, but go look at pockets in the 60s and 70s. Go look at pockets from 1995 or really 2000 until 2014. People aren't averaging 10% a year. In fact, they're losing money if you include inflation.
Yeah. Well, and to me, honestly, Matt, I do love the statistics and the thinking about it and reframing it. That the question you got to ask yourself is, am I confident just leaving my money in the market because some guy who runs a mutual fund tells me stocks do a certain thing? And, it's like, if you're out there and you're new to all this stuff, and the first thing you have to do is realize nobody cares about your money more than you do. Mm-hmm. And it's more about what do you see moving forward. We're walking down a very scary landscape, in my opinion. Tomorrow is going to be interesting. The European Central Bank and the Bank of Japan are coming out with interest rate policy. Next week, our Federal Reserve is coming out with interest rate policy. It says a lot about where we are in this world that the major news headlines are banks around the globe talking about the inflation.
It's every bank. It's not, and it's just not the U.S. Central Bank. It's the ECB, which is the European Central Bank. It's the Bank of Japan. There's 16 central banks out there. They're all doing the exact same Keynesian type, monetary policies out there, and it is the absolutely leading economic indicator right now. What is the banks doing with money? And I want to. There was an article I was looking at today, and I can't remember where it was, but it was talking about basically it was basically talking about this, that for the short term, yes, what the banks are doing is good for the stock market, but when you take into account what the banks are doing long term, you're talking about economic calamity is what you're talking about. And like Carl Icahn, the billionaire investor, he basically said this. He told NBC just yesterday that he was very nervous about the U.S. equities markets. He basically said this. You'll like this. And for those who do not know who Carl Icahn is, he shoots it from the hip. Whether you like him or not, he shoots it from the hip. And he says, reflecting on Yellen's apparent cluelessness about the consequences of her actions and fearful of the build of derivative positions, Icahn says he's worried because if Yellen does not understand the end game, then there's no argument. You have to worry about excess printing of money. That's what Icahn said. And another billionaire investor, Stan Druckenmiller, who has one of the largest hedge funds on Wall Street, he says, I am fearful that today's obsession with what will happen to the markets and the economy in the near term is causing us to misjudge the accumulation of much greater long-term risk to our economy. And that's kind of what the central bank is doing. They're kicking the proverbial can down the road. They're looking for the short term. They don't understand historical perspectives. The market, the economy, the world, they can deal with the recession. They can. They've proven it time and again. But what they can't deal with is hyperinflation.
You're missing the point, though, I think. You won't miss it, but you're just not hitting on it yet. And I agree with everything. And first of all, I love what they call FU money.
Oh, Lord.
If you don't know what that is,
Druckenmiller,
guess.
Yes. Yeah, Soros,
yes.
Buffett, they have FU money.
Right. When Icahn is talking about Janet Yellen, he's talking from a place of sincerity. He's saying the way he sees it, and I like that. But the point is, Matt, it's not that people can't handle it. It's that politicians don't want to let people handle it because then they'll lose their jobs.
Yeah.
You know, we live in such a world of instant gratification and kick the can down the road to somebody else's problems and a lack of accountability. It's not just central bankers because central bankers are tied to Congress, or Parliament, depending on the country, or the Prime Minister or the President. And they need political swagger and approval to keep their jobs. And so it's you scratch my back, I'll scratch yours kind of system. And don't you think Obama probably has had some conversations with Chair Yellen?
I do, but if you want to look at the U.S. scenario, one of the biggest, and don't get me wrong, I am not a Keynesian. I do not believe in Keynesian economic principles. Obviously, for those of you who read my article on it last week, you know exactly where I stand on that. But at the same time, one of the biggest problems with what has been happening here in the U.S. is we've had Keynesian, monetary policy from the Federal Central Bank, but with the president hasn't been applying the Keynesian principles as should be in terms of infrastructure, industry, and whatnot. It's been being put to the social welfare. And so what's happening is you got all this free money being printed out there. It's making the rich wealthier. It's making the poor poorer. And then you have Obama that is running up debt, trying to cure the inequality of what the central bank is doing. And so it's really kind of a, are they having conversations? Maybe, but at the same time, their actions are not consistent with one another.
Yeah.
All right, number four.
We need to do a whole podcast on your write-up, by the way.
We will.
I left that one there because I have too much to say. And
me as well. It's obviously there's a little controversy in that write-up. I was pretty straightforward with that.
Everybody should go read Matt's post.
Go to
tradingjustice.com or tackletrading.com. It's also on that site as well, Matt.
Yeah.
Who happens to be, by the way, the host of the Trading Justice podcast that you guys are both listening to. My name is Tim Justice, and Matt Justice, my brother, the host and co-host of this podcast, brought to you by tackletrading.com.
Yeah. And for those of you that want it, the article is labeled Keynesian and Economic Liberalism, The Rumblings of a Regretful American is the title of the thing. And we'll do a whole podcast on it, Tim, because I think it's such an important topic for people to understand, even if some of the topics will put them to sleep. I think they need to hear it anyways. All right, next one. Investing in the stock market lets you participate in the growth of the economy.
Stock prices are not tied to economic health or growth completely. In fact, that's written in almost every economist book that I can think of.
The economy lags the market, no doubt.
Exactly. And also, so much of market growth is based on inflation anyway. It's not the worst, not the most offensive one I've heard yet on the list, so I won't go off on it. But no, not true.
Well, it's not true, and we've talked about this on other podcasts as well. That the marketplace and the economy they're not correlated. In fact, most of the time they're absolutely they're divergent is the better word for it.
So hold on a sec. Now,
yeah.
I think I might just be getting the whole concept here.
Okay.
These are all not true, right?
Well, this article is saying they're all not true. I think there's some true in them, but the article is basically saying they're all mis.
I see.
Yeah. Okay. Well, and one thing on the economy, you look at the Japanese since the late 1980s, Tim. The Japanese economy has actually grown since the late 80s, but what has their stock market done? It's actually been tanked by about 3/4 since the 1980s. So, I mean, that tells you that there's no correlation there. And there's no correlation, especially since 1999, and you can even date it back to 1995. And some will even argue back to the 1960s. There's been no correlation specifically between economic activity and the growth of the equities markets. Number 5, if you want to earn a higher return, you have to take more risk.
Not 100% wrong. This I think it just depends on how you phrase it, how you frame it. Are we talking traders or just people who are investing? What's the article slant? I mean, who are they?
It's tailored to investors. Is the article slant? Ma and Pa, the average American, and whatnot. If you want higher returns, you have to take more risk. I think that's absolutely 100% a myth. That is all based on basically the lack of financial literacy of the average American. If you want higher returns, you actually do it taking less risk. And that's the hidden secret that Wall Street knows. You do not have to take more risk to get a higher yield. You do not have to take more risk to get a higher return. You need education. You need to learn how to sell a credit spread. You need to learn how to do a covered call. You need to learn how to do a naked put. For example, if you look at Jacob Pelley and Steve Wong on recent podcasts, they were getting wonderful monthly returns and hitting, a ridiculous percentage of the trades.
Right, now I got you. No, I was off for a second. I was gonna push back, and I'll give you the pushback so you understand where I was coming from. From a system and an overall portfolio perspective, what you're saying is 100% right. Mm-hmm. When you're just analyzing two trades in a vacuum, and if you're thinking about it from efficient market theory kind of back standpoint type of deal, there is a correlation between delta and ROI. There's a correlation between bond risk and the yield that it produces. Mm-hmm. But it doesn't mean as an investor, you can't be very safe and be very consistent and profitable and maybe even do better than the guy who's out there taking risks. Mm-hmm. So I think from a bigger picture standpoint, you're right. You can be very conservative and do really well if you know how to do these things. You get training and education and that kind of stuff. But yeah, I mean, there's some things in there I think you could debate, though, Matt. I mean,
I agree. But even I saw a study in researching the podcast today. I have a little bit of an unfair advantage to you because I didn't work today. I had a very relaxing day, actually. I was in front of the market. I watched a couple videos. Been watching this new show called The Strain, Tim. It's on FX. It's about vampires. It's actually really, really good. And so
I crushed the market today, by the way.
Oh, I had a great day in the market. I had the best day. I've had the best day in the market. Literally with my feet kicked up, watching The Strain. I killed the market today.
Oh, I know. I can't even hold myself back. I rarely brag about my trades, but I want you to follow this one. Yeah. So I got up in the morning very, very early, and I read all the news and all the economic data, went through my routine pre-market, and I looked at the futures markets, and the dollar was flat, but oil was up big on that news out of Russia and everything. Mm-hmm. Okay. Now,
Okay.
I thought to myself, okay, if the dollar tops out and starts selling, that's going to create some inflationary pressures into commodities. There's usually an inverse relationship. Long story short, I went long oil because of, just the conditions intermarket, and I did it, and this is true podcast style here, actually through a spread in the futures options, like Jake does with CL. But I did it much higher delta at the money as a debit spread, Matt, and
Ooh,
just
nicely
absolutely
done.
crushed it. Yeah.
You got at least a point on CL then.
Yeah.
Nicely done. So did you do anything else besides the trade on crude?
No, in and out in a day, clean by the end of the day. Yeah.
I basically got in and out at different levels on IWM, and I had a really, really good day. All to the downside, obviously. But yeah, it was a good day in the market, absolutely. But coming back to the high risk, high returns, I was doing some research today as I was watching the strain, as I was day trading. Life of a trader, right there, right? But I was doing some research, and I ran across a study from 1982. It was dating back to 1982. It was a current study, and it took dividend-paying stocks versus non-dividend-paying stocks. And dividend-paying stocks are typically considered more conservative, safe type trades, very cautious type stocks. Non-dividend-paying stocks, they're a little more volatile. Which one of them had a higher yield yearly on average? Dividend-paying stocks, which are more conservative, or the higher risk higher risk and the traditionally thought to as potentially higher returns non-dividend companies? Which one had a higher average return?
Probably the dividend payers, I'm guessing, because
Wasn't even close.
Yeah.
Honestly, it was 8.7% yearly to 1.5% yearly.
Wow.
Not even close. And so when we talk about you have to take a higher risk to get a high return, that's not remotely true, not in any capacity. That's just what people think that they have to do to beat the S&P 500, but it's actually not true in any capacity. Okay, next one. Tim, you cannot time the market. You cannot time the market.
Probably the biggest myth on the entire list.
Yeah, it's horrible, isn't it?
Especially for short-term traders. Think about my CL trade this morning, the crude trade. Think about technical analysis in general. If you have traded for longer than a year, you know that charts actually do matter, especially on shorter-term signals and with the trend in mind. Trend is the most important concept in technicals, and timing. First, even little things, Matt, like just understanding the weekly schedule and the daily schedule of when markets open and when the futures market opens and how the first hour of the day is different from lunchtime.
Or, yeah, you said the futures market, knowing where the stock market's going to be open based on the futures market or what the currency market is doing in relationship, all the correlations between different asset classes, whatnot, technical analysis. Obviously, you never want to get in at the very, very bottom. You never want to get in at the very, very top. It's a concept we call confirmation in trading. But at the same time, people who say you cannot time the market, they don't know what they're talking about.
No, where do you think that comes from, though? Because
I think most of
really
these
popular in academics.
Honestly, Tim, I think most of these come from Wall Street. I think most of this is part of the entire traditional model that basically says, since you can't do it, let us do it for you. I think a lot of it comes from that. Like the next one comes from, we recommend a diversified portfolio of mutual funds.
Of course
they do, right? What else are they going to recommend?
Yeah, the Hispanic guy who has the taco stand recommends that you try pork on Tuesdays, beef on Wednesdays, and chicken on Thursdays. Yep, and tacos are great for you. And did you know, Matt, that if you eat jalapenos every day, your chance of getting cancer goes down by 5%?
Is that true?
No, I had none of that stuff.
Okay,
I know.
You made all of it up, except the taco stand. Yeah,
they have a built-in incentive to sell you the same thing. Of course, Wall Street's going to tell you that you should have a diversified set of mutual funds. The whole idea, this is the simplest thing. I want every podcast listener
go ahead
to think about this for a second, and I'll make this as simple as I can. you can be short-term or long-term investor. You can be a risky, or like Matt says, a more profitable, more consistent, conservative investor. You don't ever need to buy another mutual fund in your life. You don't need to do it. No, of course you don't need to have. I mean,
it's ridiculous. It's absolutely asinine. It's the same BS that Wall Street puts out to consumer America. And don't take my advice, guys. Don't take Tim's. Listen to Warren Buffett. He says basically diversified mutual funds are a protection against ignorance. That's it. And that's Warren Buffett, the greatest investor of all time, the Oracle of Omaha, and it says it is simply a protection against ignorance. What in the world are you doing?
Did you hear that ring? That was my phone.
Oh, man.
So we've got fantasy football leagues starting up, and so my phone's been blowing off the hook lately.
Shut the phone off.
I just shut it off. It's
Shut
okay.
the phone off. Oh, my goodness. All right, so diversified mutual funds. Now, if diversification is a protection against ignorance, and if we're and by the way, I want everybody out there that listens to in Trading Justice, land, I want you guys to go out there and assess where your mutual funds are. Number one, I want you to see if you have a diversified mutual fund base, which is, once again, a protection against ignorance, because there's a certain correlation between all asset classes when the markets go down. And I want you to contact your broker, and I want you to ask your broker if this is a right time to cash out of your mutual funds. And I want you to see what they say. And then hit us up on Twitter, hashtag Trading Justice, and tell us what your mutual fund advisor said. Did they tell you to cash out? Did they tell you to stay in for the long haul? If they told you to cash out, that guy's a good guy. If they told you to stay in for the long haul, they're a salesman. Okay, because and think back last time, 2007. How many mutual fund advisors on Wall Street told their client base to cash out? How many? How many of them picked the top of the market then? Okay, check it out. Hashtag Trading Justice, or we should do another hashtag, but let's do it for, that for right now. Next one, Tim. This is, let's go with stocks outperform over the long term.
Not correct. No, that is a myth. That is a myth.
Okay.
Because there have been some gold investors that hit the run there that was tremendous for a while, that did just amazing in metals. You look at alternative currencies right now, Matt, people who bought onto Bitcoin, I think they're sitting on a pretty good ROI if they were mining Bitcoin a while back. Entrepreneurs in general, just starting a business, could probably make more money, if they're good at running businesses or investing in the right businesses. Mm-hmm. No, stocks don't always outperform over the long haul. That is a myth.
It's ridiculous. In the long run, we're all dead.
Right.
Define long term. You got to define long term. Is long term a year? Is it 6 months? Is it 40 years? What is long term? To me, long term is I've been in a trade for 3 weeks.
Yeah. For me, and I guess I'm coming from the slant of what they're talking about here, probably a year or longer for people.
Yeah, I would say so as well. It's an interesting dynamic when we talk about traders. And this entire list leads me to one conclusion. You have to get rid of your traditional mindset. You have to get rid of that mindset where, I'm going to have this nice little 401k. I'm going to have it for 40 years. I'm going to retire wealthy. I'm going to retire in Phoenix or Florida or San Diego or in the mountains somewhere. Because the reality is this. Go see how many people that are 55 to 65 that are ready to retire with enough money to handle their entire retirement, because that's what's been going on. That generation has been through this model the entire time, and it's just not there. It hasn't worked for the prior generations, Tim. It's not working for our generation, and it's absolutely not going to work for the millennial generation either. So you look at it, there's got to be a different answer. So if the answer is not go a well-diversified mutual fund for 40 years, what is the answer?
My personal opinion on that?
Yeah.
I think it's got to be complete mindset. The answer is not one thing specific, because the market will change. Man, I didn't even know what Bitcoin was 2 years ago. I just got my first wallet installed on my phone.
Did you buy the pizza? Did you buy the pizza?
didn't get the money in the Bitcoin wallet ready enough, but I can buy the pizza tomorrow.
I want to see this pizza being bought.
In fact, I'll take a picture. I'll put it on Twitter.
Awesome. Awesome.
Everybody can follow me at Tim Justice Utah. Not real creative. I
horrible
know
name.
That's my Twitter handle.
Mine's not better. Matt Justice 13. They're both horrible.
But anyway, I'll take a Twitter picture and send it out. But Matt, I honestly, who knows what the next opportunity will be in 5 years or 10 years?
That's why the answer isn't, stocks or options. It's not one answer. It's the answer is what a lot of people don't want to do, because a lot of people are lazy, Tim. A lot of people are complacent. They've given their authority away to other people. That's they don't want to hear this, but the answer is you got to educate yourself. You have to educate yourself on financial understanding, on what happens, because you have to have the ability to recognize where the risk is, where the reward is. You have to have the ability to recognize when the next massive reward is. You have to have the ability to understand when the next Tesla is going to hit big. And if you don't have that ability today, you got about 6 months, I would say.
I'll even go beyond that, Matt. I think you have to allow yourself to succeed. Mm-hmm. There are a lot of people I know that simply they're afraid of success almost at some core level. It may be deep-seated, but I really believe this. Maybe they're in sales, but they don't know how to finish a deal as well as they could because they're, for whatever reason, they're hesitant. Or maybe they could easily get that next promotion at work, but they don't know how to leverage themselves into it, or they're afraid of doing it because they don't want to look like not the cool guy at work or whatever it might be. Or even in trading, I've seen people that just won't embrace success. Mm-hmm. Guys, let me tell you something. One of the most important things that ever happened to me once I met, one of our mentors, Matt Robert Kiyosaki, and it was a mindset shift where I started to realize, what, it's okay to make money. Mm-hmm. It's okay to have success. And it's okay to have failure, too. You have to keep trying. And if you get rejected and you get knocked down, just get right back up and go after it.
Well, Robert likes to put it out there quite a bit that if you're not failing, you're not trying.
Yeah.
And you gotta get outside your cone of safety, your box of safety, and you gotta put it out there, because and the thing about it is, if you don't have your money out there, you're not making money. I had an absolutely fantastic day today, Tim, but at the same time, if I was nervous because yesterday, not yesterday, but on Friday, I got it handed to me a little bit in the market. If I'm not out there trying, and if I'm not out there working, then I'm never going to have a day like today. You're never going to have a day like today. And honestly, I think it's going to get a lot better tomorrow, to be perfectly honest with you. I want to play you a little bit of a video clip real quick. It kind of goes in line with what we're talking about, and about the safety of the market, about this is the right time to invest, about what the money managers out there in the market say to you regarding your 401ks. And I think you've heard enough. George Soros, and Call Icon, Stan Druckenmiller. This is a guy by the name of Sam Zeile. He runs the Equity Group Investments hedge fund, basically. He's the chairperson on it. And he says this: it's billions and billions and billions of dollars of hedge funds. Listen to the video.
The market is at an all-time high, but economic activity is not at an all-time high. And so from my perspective, I think that effectively people have no place else to put their money, and the stock market is getting more than its share. And it's very likely that something has to give here, because you just can't continue. In other words, almost every company that's missed has missed on the revenue side, which is a reflection of the fact that there's a demand issue. And that demand issue continues to be prevalent. And when you got a demand issue, it's hard to imagine the stock market at an all-time high.
I want to get your take on what Sam Zeile said, and then I'll give you mine.
Well, it kind of sounded like his voice is really cool. Now I need to put a face to a voice.
Oh, dude, you should see the picture. He's bald. He's an older gentleman, and he's got his white shirt unbuttoned, like 3 down, like he's showing cleavage, like he's a top 10 model or something. It's
he should
awesome.
be at a horse track.
Oh
with
Lord, I could see him with the cowboy hat on. It's an awesome picture. Yeah. So what's your take on what Sam Zeile is talking about? How the market's at an all-time high, but there's a lack of correlation between economic activity and the market, where the market is.
Well, I think what he just did is he confirmed exactly what Ben Bernanke, his vision was. Mm-hmm. Ben would be not, if Ben Bernanke heard him talking about this, he'd be nodding his head. Well, yeah, of course it is, because we didn't give anybody else a choice. We killed interest yields and bond market yields to the point where nobody wants to invest in them. We brought the treasury market so far in terms of the actual yield, the return you get, out of whack with it. Who wants to invest in it? We killed the dollar for the better part of a decade. You had to put your money into stocks if you were running a hedge fund or an investment fund. Mm-hmm. Where the heck else would you put them? Mm-hmm. I mean, so yeah, he's 100% right. Now, in terms of when it gives, I think that is so much more up in the air than what people think. It could happen at any moment, because I've been thinking a lot about this lately, Matt. And you look at historical stock market crashes. Usually, it comes out of nowhere. In terms of the reason, not the expectation. People tend to start building put option positions and that kind of stuff.
Like Soros is doing right now.
Yeah. Yeah, so people are expecting something, but you don't know when that lightning bolt is going to strike.
Honestly, Tim, I think what you're getting at is what triggers it. I don't think we know the trigger. I think we know the reason. The reason is that quantitative easing can't go on forever. The Fed's pulling out of the market. But what is that reason? What is that reason out there, or the triggering impact? Is it going to be Ukraine? Is it going to be Japan? Is it going to be something that goes on here in the stateside? What is the reason given? Is it going to be an absolutely atrocious economic report? Is it going to be an earnings season? I don't think we know the triggering impact, but I absolutely believe we know the reason, and the reason is quantitative easing. But think about it right here. What he said here, he said we have a demand problem. That's the biggest problem. We have a lack of demand, and yet the Federal Central Bank for 5 years now, for close to 5 years, has been increasing the supply and the excess supply of money, and yet we have a demand problem. Those two are not, they don't make sense. It does not make sense to increase supply if you have a demand problem. The reason Keynesian principles worked in any capacity is because you had no demand problem, you had a supply side problem. And so you wanted to increase the supply because demand was already there. Right now, and we can get into this when we talk about Keynesian philosophy, but right now...
You're going to make me make the other side of the argument, and we got to hold that for another podcast.
We will, but I'm just going to say that right now there is a massive demand problem, and I think the revenues out there from corporations are proving it. And what's happening is the money is going specifically to the wealthy, and you're seeing basically the escalation of the death of the middle class.
Guys, you're listening to the Trading Justice podcast. That's my brother Matt spitting some truth right now, kind of like Eminem in 8 Mile, Matt. Got to get up there and drop the mic.
Am I going to just drop it, walk off stage? Is that what I'm going to do? Go kiss the hot chick? Oh, I like it.
Our podcast is hosted on tradingjustice.com. You can find it on iTunes, or you can find it at tackletrading.com, which, Matt, you and I are both a part of that team over there, and that's an exciting project.
Well, we're moving a lot of the Trading Justice stuff over to Tackle Trading with our business partners, Gino Porter and Noah Davidson. We're just getting so excited for Tackle Trading. It's our plan is to make it one of the best online destinations for people who want to take control of their financial money for the financial future. From videos to newsletters to live webinars to to coaches shows and you name it. We just got a wealth of activity going over, and it's really new, and we're making improvements to it every day. But it's been an awesome journey, and I'm just looking so forward to seeing where Tackle Trading will go in the future.
It's exciting, and the whole thing is community based. Mm-hmm. It feels to me almost like an open source project in one sense, is that I think a lot of the true glory that Tackle Trading can and will become will be based on the users and the members. getting in there, participating, helping each other out, sharing ideas, sharing knowledge, and so that we can all make more money in the market.
Sometimes you just got to get that cattle prod out there to get them moving, though. You know what I mean?
Sure.
And that's the thing. Never hesitate to drop us a line on Twitter, Facebook, on the website, guys. You need help. You got to ask first if you're going to get some help, and that's why we're doing what we're doing, is trying to preach the good word of investing and trading. But honestly, Tim, one of the reasons why I created this podcast in the first place was I wanted an avenue to get the message out for people that not only I care about, but for the masses too, that there's significant risk out there in the market, ladies and gentlemen. And we're seeing a lot of the similarities that we saw before the dot-com crash, before the subprime market crash. And if you do not want to go through that again, if you don't want to go through that pain and you want to break the cycle in the market, break your cycle in your 401k, then, there's an opportunity. There's a roadmap. It's called tackletrading.com, guys.
Well, and to me, there are two different levels of exposure that are just broad. There's many different levels, but two that you're touching on right now. There's the person out there who's listening that maybe doesn't have the time or the skill or the desire to trade every day, Matt.
I guess they have the desire to lose money then.
But what I'm going to say is, even if that's where your brain is right now, we're going to help you change that, number one. But number two, still realize you have to educate yourself with these market conditions, because they're changing, and they're very, very tenuous at best. And I really could see this whole thing turning at some point.
I think what you said is a little bit of a misnomer, though, and I know you didn't mean it, but I want to clarify here.
All right,
for the people that don't have the time necessary to trade, that's ridiculous. It took my daily routine about 3 minutes today. 3 minutes. That's ridiculous. It's absolutely asinine that people think that they do not have enough time. You want more time, you need to learn how to invest. You need to learn how to trade. So I just want to clarify. I know you didn't mean that, but
I'll give you an example of exactly the type of person that was in my brain when I was talking like that. I have a friend. She's a therapist, professional therapist. She works as a psychologist, I think. And she works with recovery addicts and everything. Mm-hmm. And she calls me probably once a month and asks me what to do with her 401k. She in her mind, she's smart, Matt. She has I think a PhD, I believe, and but she has no education with money. And I'm just thinking, if somebody like that just happens to be listening, I'm almost begging them, please start thinking about this. Even if you don't think you can. Believe me, you can. That's all I was really
You can lose more in the market in the next 2 years than you can make at your job in the next 2 years.
That's
okay,
true.
so if your little psychosocial friend doesn't want to, I wanted to go there with it. Psychological friend. If your little psychological friend doesn't have the time or inclination to deal with it, I can't wait to take her money in the market in the next 2 years.
That's so cruel. She's such a nice person.
I don't care. If people want to say they don't have enough time, good luck to you.
But here's the thing.
That complacency pisses me off. Not for that. Not for people who are lazy.
Change people's minds overnight, Matt.
I don't listen. She calls you every month. It's not overnight.
And
she calls you every month.
Her, and she's changing, and she's moved into more.
Now she calls you every 2 weeks.
Yeah.
It's the thing that drives me crazy in society is everybody wants somebody to tell them what to do. That drives me crazy. And so if you're going to change that mentality, sometimes they have to lose all their money. And if I have to take some of it in the next bear market to prove my point, I'm fine with that.
Oh, I have a hard time arguing with the point. I think it's a fair point. I hope that people out there, because I'm a humanist, honestly, and I'm not saying that to be funny or anything. I don't like it when people get hurt in situations like economic collapses.
No, of course not. I'm not saying that. Of course not. And I hope you're not implying that I hope everybody is going through massive amounts of pain in the next 2 years.
You remember who Skeletor is?
Yes.
You just are being like
Skeletor. Are you He-Man?
Right now.
Are you trying? Am I right? Is it Skeletor and He-Man? Is that the cartoon?
Oh no! I was thinking of the guy in the Smurfs that sits up in the castle.
Gargamel. Yeah, I'm Gargamel. Thank you. I appreciate that. I'm the economic Gargamel. Thank you. Yes.
Make a T-shirt. Give me a T-shirt.
Yeah. Market assassin Gargamel. Boom. Done. final. No, I'm not. I don't want people to. I go out of my way to help people so that they won't do that. But if people will not do it for themselves, why would I spend 1 ounce of my moment trying to convince somebody to take control of their own lives? If they want to give that to somebody else, they want to give it to Wall Street. And honestly, Tim, if they want to give it to you, shame on them. Take control for yourself. I'll help you do it. You'll help them do it.
I understand. All you can do is you can put the ball in somebody's court. You can plant a seed. I mean, and that really truly is where my mind is when I'm working with friends and family and whatnot, that I know maybe they're not ready to accept a message. Maybe they're too worried about whatever they're dealing with in their life.
And you know what? They're never going to be ready to accept that message until something painful happens. Right. And either two things are going to happen. They're going to blame Wall Street, they're going to blame their politicians, or they're going to accept responsibility that they gave their control to somebody else. They are responsible, and they need to take it back. One or the other. To me, Obama has no impact on my life. None. Politicians have no impact on my life. The central bank has no impact on my life. I control my financial life. If the markets go up, down, sideways, I don't care. My job is the CEO of my family, and I'm going to make money. That's the reality of the situation. And if you don't have that type of control right now, you can get it. I promise you, you can get it. You just got to first make the decision that you want it. And sometimes that it comes from a painful scenario. Other times it comes from, I don't want to go through what we went through in 2008 before, so let's not repeat that. I don't know what the motivation of everybody is. I know that if anybody is willing to invest in themselves, I will do whatever I can to help them achieve their financial goals from both a money standpoint, from a knowledge standpoint, from an education standpoint.
Pleasure and pain, right? Greed and fear.
Oh, absolutely.
It can come from a scenario of success too. If you start your first business or you make that first trade, and you start to really get a system in place in education, the way you feel empowered and excited about waking up and pushing that idea and making your business more profitable, I mean, it just grows and grows from there. Matt, I don't wake up afraid of the market realities. I wake up thinking, what can I do today to make money? What can I do today to navigate the market waters, get a little bit better, make a little bit more money? And you're right with that. The mindset there is critical. I got to get wrapping here soon, bro.
Last two things, going to be real quick, just as a news headline more than anything, then we'll go to final thoughts. Number one, Tesla. You guys know we both love Tesla Motors very, very much. Tesla picked the site for their gigafactory for their batteries, Tim. It's going to be in Nevada. Interesting. Tesla was at all-time highs today. I remember trading Tesla when it was a $50 stock, Tim. And just to kind of let everybody know, my long-term projection on Tesla has been it was 330 about 3 months ago. I modified that to 300. Tesla is currently at 281, and I am going to throw a party once it does hit 300. So that's headline number one. Headline number two I saw today was there was the highest bull to bear ratio since 1987. Okay, what that means is that where are the bears at? Where are the bears at, Tim? Where are they? The highest ratio of bull to bear, which means for every 10 bulls, there's one bear. Okay, it was like 4.5 to 1 is what it was. But in your estimation, T, where are the bears right now?
Well, let me first start with Elon Musk. I think he is a Steve Jobsian type figure.
Genius.
Yeah, and I think that it's the kind of example where you get great leadership in a company and people will have the confidence to want to continue to buy into you and buy into your products and your ideas. Now, fundamentals do matter as well, but to tell me a figurehead or an image doesn't matter is false.
He's awesome.
He's awesome. That's number one. Number two,
he makes rockets that go into space, T. He's awesome.
Right. Well, I mean, it's just mindset. It's everything we want to keep getting people to buy into out there and think about and want to be themselves. Now, you may never be Elon Musk. You might be better, but it's a mindset. It's waking up trying to do something awesome. Now, the thing about where are the bears, I mean, they're probably day trading the bullish side of the market. If they're actual good traders, they're a little bit. They're probably also, there was some selling at different points in the last 2 days. We had some selling early on yesterday.
Think about it. We talked about this on the podcast last week, Tim. When the market was basically this movement in the market that it's had, where's the volume been? The volume hasn't been. The bears aren't there right now. They'll come back. They're not gone. That's the thing, and that's what I'm trying to get at. Is they're not gone. They're just waiting. They're waiting. That's it.
They can let that hot air balloon float a couple of more months up, and then they're going to blow it out of the sky with a cannon.
Yeah.
I mean, it's
it's interesting to me that over the last week the market literally has done nothing. On low volume, it's done nothing. And good news, bad news, it's done nothing. It'll go up, it'll come right back down. It goes down, it goes right back up. And that's with the bears that are at the lowest ratio since 1987.
Sure.
You bring those bears back into it. They might start kicking some tail, man.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.